Welcome back to my channel. In today's video we're going to be covering how to identify a trend reversal in forex trading. So let's get started. First thing first, please read the disclaimer below, guys. Once you've done reading it, you can continue with the video. Okay, I'm hoping that you guys have read it by now, so let's get started. So a lot of people have been asking me, how do we identify a trend reversal, or when do we know when the trend is about to reverse? So in this video we're going to cover how do we work this out, when do we know the trend is going to reverse, what are the things that we have to have a look at, and also how we can maximize our trading opportunity by the use of these multiple confluences and be in the right side of the market. So trend reversal is obviously, as you guys know, we're following a trend. Let's just say there's an uptrend with a series of high highs, high lows, and trend reversal is when the uptrend is no longer valid and the price or the market is looking to go in the opposite direction, meaning that the market would like to reverse, or the market is going to reverse. And how do we identify it? That's the vice versa, like the opposite for, let's just say if the market's going down and with a series of low lows and low highs, and it gets to the bottom, for instance, like a support level, and then the market decides to reverse. So how do we know when the market is reversing? So this is what this video is all about. And then when the market is reversing, again, we want to be following the trend. We don't want to be on the opposite side of the market. We don't want to be calling the ends. We want to be following the trends. So this is really crucial, that we know when the market is about to reverse, and how do we identify it is really crucial. And there's various ways which I'll be showing you in this video. How do we do it? By the use of these things. So let's get started. So there's signs and there's potential reversal things that we look up for us to identify that the market is going to reverse. And there's various things. So things like the technical indicators, for example, the moving averages. As you can tell with this example below, as in the background as well, guys, that the price was going up, but then the price fell below the moving averages, and we've seen a crossover as well. So then at that point we can anticipate the market's about to reverse. Again, from here the price bounced up and then it went above the moving averages, meaning that the buys are still valid. And we've also seen a bullish crossover here for us to say, look, the buyers are in control. So technical indicators like the moving averages can play a huge part in this. So that if the price is above the moving averages, then we're looking to buy, and if the price is below the moving averages, we're looking to sell. And let's just say after a series of high highs and high lows, or an uptrend, the price goes below the moving averages, then we can anticipate that this could be a trend reversal. There's also things like the RSI. I've got a video on the RSI on my channel as well. So RSI tells us when the market, or when the price is overbought and oversold, and there's a reading between 1 to 100, and if it goes above 70, that means that the price has been oversold, and it will be if you're looking to reverse. And the other way around, if it goes below the 30 level, then we can say that the price has been if the price goes above the 70 level, that means that it's been oversold. And if the price goes below the 30 level, then that means that the price has been overbought, and it's going to be the opposite side of things. So when the price is oversold, we're looking for a reversal there. When the price is overbought, we're looking for a reversal there. And this helps us identify what's going to happen. And RSI could be an indicator that we use. I've also made a video on RSI on my channel, so you guys can go back to it and have a look at it if you need to, and it'll give you a clarification of everything. There's also things like the candlestick patterns as well, such as the doji, the hammer, the hanging man. So there's a hammer candle here, as you can tell. The doji is, I've also got a video on dojis and these candles as well. So doji looks very similar to this one here. Again, and hanging man is the opposite of hammer. So usually like this candle here would come as a hanging man. That would be like a doji candle. So that's indecision. So if you see these at the top of the peak of the trend, or at the bottom of the trend, then these could identify that the market may be looking to reverse, so we're going to be following that. There's also things like the volume analysis. So when we see a decrease in volume, we can in one direction. So let's just say the market was going up and there has been a decrease in volume. When it gets to a certain resistance level, then we can anticipate, or we can expect the market to reverse, because the volume has decreased and the buyers are not strong anymore, and also the sellers might take over by pushing a candle down and that has broken a structure, or a couple of candles down that break a structure, followed by an engulfing candle, such as a candle that's, for example, here, as you can see, there's a decrease of volume. We've had a doji candle here, then it's followed by an engulfing candle. So this shows that the sellers are strong. So this a scenario like this can possibly tell you that the market is about to reverse. There's also things like the trend line or the key structures. So if you had a trend line here going upwards from here, and then if it broke the trend line, or if it broke a particular support level, for instance here, then we can anticipate that the price is about to reverse and the market will or can reverse from here, and we can look for reversals in that particular occasion. There's also things like the RSI and the moving averages, which I've explained. If the price is below 30, then it's oversold and the market they'll be looking for buys. If the price is above the 70 level, then it's been overbought and we're looking for a reversal there as well. So these are things that can help us to identify the divergence in the market, and we can work it out by the help of these things in various ways. There's also things like the price patterns, like double tops and double bottoms. So as you can tell here, let me give you an example of this. Is a triple bottom type of pattern here, triple top, sorry, type of pattern here, and then the price did reverse from there. Double bottoms are usually like this, so it's like a W at the bottom, and then the price does reverse from here as well. In this instance, the price did reverse, followed by showing a weakness and then engulfing as well. So these are the things that we can use as a probability or as a confidence to trade in the opposite direction, and then that's when we know the market is about to reverse. If you're enjoying the content that I'm providing, please like, comment and subscribe to my YouTube channel for more videos. Thank you. So I've got an example here as well for you guys. As you can tell, the price was going up by creating a series of higher highs and higher lows, and then it went up to that particular level. This was a resistance level. RSI showed that the price was again overbought in that particular situation. It is above the 70 level, and then what we saw was there's a break of structure, there's a double pattern on top as well. We have seen a decrease of volume because the volume started to die down when it got to that particular level, and then after that, once the structure was broken, followed by an engulfing candle with the help of RSI, the price started to reverse, and then it started to go down by creating low highs and low lows. Again, then it broke below the moving averages as well. We've had a death cross, and then from here the price, this is when we know the trend has reversed and the price will go down. These are the confluences that we put together. I mean, this is the only time we can look for a reversal, when the market is no longer following the trend and is broken levels, and it's basically showing weakness, and it's showing you that it's been overbought, and then we can look for possible reversals in the forex market. So you can screenshot this example as well, and I hope that this all made sense to you. I've also got videos on the RSI and the moving average on my trading channel, so please go back to them and watch those as well. If you're confused, please leave a comment below and I'll be happy to answer as well. Please like this video and subscribe to my channel as well for more videos like this. Again, in conclusion, guys, we need to recognize a trend reversal by the help of different things and different confluences that we put together by understanding the patterns, by understanding the volumes, and by even looking into the fundamental factors as well to see why the price could be pushed down. Again, this isn't a bulletproof method. This will have your series of losses or series of wins, depending on what type of the way how market reacts. But we need to make sure that we use a proper risk management, that we follow proper risk parameter guides, we follow the risk to reward ratios, and combine these methods, and hopefully we can then be on the right side of the market. I would urge you guys to practice on TradingView or on a demo account to get it right before you go on the real account, and hopefully go back to your data that you've collected, and you can understand what works, what doesn't work. And my YouTube channel has a series of different videos that can help you become a successful trader, so please follow that as well, guys, and subscribe to my channel. And again, practice makes perfect, so the more you practice, the better you'll get. I hope that this video gave you a better understanding of when the market reverses, what are the things that we look for, and how do we know when the market's about to reverse. So thank you so much for watching, guys, and I'll see you in the next one.